What is the best strategy for US30? This is a question that many day traders often ask. So, let's dive right in and shed some light on this intriguing subject. US30, also known as the Dow Jones Industrial Average or simply the Dow, is one of the most widely followed stock market indices in the world. It represents the weighted average of the prices of 30 large publicly traded companies in the United States. These companies are industry leaders and are often regarded as a reliable indicator of the overall health of the U.S. economy. Why is US30 such a popular choice among day traders, you might wonder? Well, there are several reasons. For one, it's extremely liquid, which makes it easier for traders to enter and exit positions without significantly impacting the price. Secondly, the Dow's price movements tend to be relatively predictable, following clear trends that can be analyzed using various technical indicators. This predictability is a boon for day traders who rely on short-term price fluctuations to turn a profit. But perhaps the most compelling reason is the potential for high returns. The Dow's high value means that even small price movements can result in significant profits or losses if you're not careful. That's why it's crucial to have a sound trading strategy in place, one that takes into account not just potential rewards, but also the risks involved. So how can you devise such a strategy? It begins with understanding the dynamics of US30. This includes being aware of the factors that influence its price movements, such as economic data releases, corporate earnings reports, and geopolitical events. It also involves learning how to use technical analysis tools, such as moving average lines, to identify potential trading opportunities. In essence, trading US30 successfully is about much more than just buying low and selling high. It's about understanding the market forces at play, interpreting the signals they send, and making informed decisions based on that understanding. And that's exactly what we'll be exploring in the next few scenes. Understanding US30 and its dynamics is the first step toward devising a successful trading strategy. To strategize effectively, understanding market trends is crucial. In the world of trading, a market trend is the perceived direction of financial markets for a certain period. Trends are categorized into three types: upwards, downwards, and sideways. Let's break down these trends. An upward or bullish trend is characterized by a series of higher highs and higher lows. This indicates that the prices are generally increasing over time. In the context of US30, a bullish market would see the index's value on an upward trajectory. A downward or bearish trend, on the other hand, is marked by lower highs and lower lows, suggesting that prices are generally decreasing. If the US30 is in a bearish market, the index's value would be trending downwards. Lastly, a sideways or horizontal trend is when there's little movement in the prices. The highs and lows are relatively at the same level, indicating market uncertainty. For US30, this could mean that the index's value is relatively stable, with little fluctuation. Identifying these trends is vital as they can significantly influence your trading decisions for US30. For instance, in an upward trend, it makes sense to buy US30 if the current price is above the moving average line, signifying a likely continuation of the trend. Conversely, in a downward trend, it would be prudent to sell if the price is below the moving average line, indicating a possible further decline. However, remember that trends are not predictions, but observations of the market's current state. They do not guarantee future performance. It's also essential to consider other factors, such as market volatility and economic indicators when trading US30. Understanding market trends is more than just recognizing patterns. It's about making sense of these patterns and using this knowledge to guide your trading decisions, whether you're considering a short-term trade or a long-term investment in US30. Recognizing market trends allows you to make informed decisions when trading US30. Timing is everything in day trading. When is the best time to trade US30? To answer this question, it's essential to understand that the best time to trade often depends on when the market is most volatile. Volatility is a measure of the degree of variation in trading price series for a particular market index, in this case the US30. The higher the volatility, the higher the profit potential, but it also means higher risk. Therefore, it's crucial to find a balance that suits your risk tolerance and trading strategy. During the trading week, the US 30 is most volatile when the New York Stock Exchange is open. That's between 9:30 in the morning to 4 in the afternoon Eastern Standard Time. This is when traders can expect the most significant price movements and the highest trading volumes. However, it's also essential to consider significant economic releases. The US 30 is heavily influenced by economic indicators such as the gross domestic product, the non-farm payroll report, and the consumer price index. These are typically released before the market opens or after it closes, causing sharp price movements. In addition to these regular events, unexpected news related to the economy, politics, or significant events in the companies that comprise the US 30 can cause sudden volatility. Being aware of such news and understanding its potential impact can give traders a significant advantage. It's also worth noting that the best time to trade can change based on market conditions and global events. For instance, during periods of high global uncertainty, such as a global pandemic or geopolitical tensions, the US 30 can experience higher volatility outside of the typical trading hours. In conclusion, while there's no one-size-fits-all answer to when the best time to trade is, by understanding market volatility and keeping an eye on economic events, traders can identify potentially profitable trading opportunities. Choosing the right time to trade is vital for successful US 30 trading. One strategy for trading US 30 involves using moving average lines. Moving average lines, or MVA lines, are a popular tool for traders who want to gauge market trends and make informed trading decisions. These lines are calculated by averaging a particular number of data points from the recent past and plotting them on a chart. The result is a smooth line that can help traders identify trends and make predictions about future price movements. So, how do we use these MVA lines when trading US 30? Well, it's all about observing the relationship between the current price and the MVA line. If the price of US 30 is above the MVA line, this typically indicates an uptrend. In this scenario, you might want to consider buying US 30. Conversely, if the price is below the MVA line, this suggests a downtrend, and selling US 30 might be a good move. But what if the price is exactly on the MVA line? In this case, the market is in a state of equilibrium, and it might be wise to wait for a clearer signal before making a trade. Remember, patience is a virtue in trading, and sometimes the best move is to wait for better opportunities that meet your trading parameters. Now, it's important to remember that MVA lines are not a crystal ball. They can't predict the future with 100% accuracy, but they can provide valuable insights into market trends and help you make more informed trading decisions. Another key point to keep in mind is that MVA lines are just one tool in a trader's toolkit. They should be used in conjunction with other technical analysis tools and strategies to increase your chances of trading success. So, to recap, MVA lines can help you identify market trends and make informed trading decisions when trading US 30. If the price is above the MVA line, consider buying. If it's below, consider selling. And if the price is on the MVA line, wait for a clearer signal before making a trade. With practice, moving average lines can be a useful tool in your US 30 trading strategy. Certain companies have a more significant influence on US 30 than others. That's right. Just as a single stone can create ripples in a pond, a handful of companies can significantly impact the US 30 index. Let's jump right in and talk about these key players. First and foremost, we have Boeing. As one of the world's largest aerospace manufacturers, any turbulence in its operations can cause the US 30 to take flight or nosedive. Next up is 3M. This multinational conglomerate operates in fields such as industry, worker safety, healthcare, and consumer goods. Changes in 3M's performance can reflect broader economic trends affecting the US 30. Then we have Chevron, one of the world's leading energy corporations. Its performance can be influenced by global oil prices, economic indicators, and geopolitical events, all of which can ripple through to US 30. Now, let's move on to a name you're all familiar with, Apple. As one of the largest tech companies globally, Apple's performance can significantly sway the US 30. From product launches to earnings reports, stay alert to Apple's movements. Next is Goldman Sachs, a leading global investment banking, securities, and investment management firm. Fluctuations in Goldman Sachs's performance can be a bellwether for the financial sector and, by extension, the US 30. Visa, a multinational financial services corporation, is another key player. As it facilitates electronic funds transfers worldwide, Visa's performance can provide insights into consumer spending habits affecting the US 30. Lastly, but certainly not least, is Home Depot. As the largest home improvement retailer in the US, Home Depot's performance can mirror the health of the housing market and consumer confidence, both of which can impact the US 30. So there you have it. These are the companies that wield the most influence over US 30. Whether you're a day trader or a long-term investor, keeping an eye on these companies can provide valuable insights into US 30's potential movements. Keeping an eye on these companies can provide valuable insights into US 30's potential movements. Can trading US 30 be profitable? A question many traders ask, and the answer is yes, it can be. But it's essential to remember that trading, like any other investment, comes with its own set of risks and rewards. Trading the US 30, which represents 30 major US companies, can indeed be a potentially lucrative strategy. However, it's not just about jumping in and hoping for the best. Profitability in trading US 30, or any other index for that matter, relies heavily on strategy, risk management, and understanding the market. One of the attractive aspects of trading US 30 is the high value of a single contract. This provides an opportunity for traders who are eager to diversify their portfolio and increase their US-based investments. However, this high value also means that losses can be significant if trades don't go as planned. Hence, it's crucial to have a strategy in place and stick to it. Furthermore, risk management plays a key role in profitability. This involves setting stop losses and take profit levels to manage potential losses and lock in profits. It also involves only trading with money that you can afford to lose to protect yourself from significant financial harm. Understanding the market is another crucial factor. The US 30 is influenced by a variety of factors, including domestic and international events. Therefore, staying informed about these events and understanding how they may affect the US 30 can help you make more informed trading decisions. Moreover, using tools like moving average lines can help identify potential buying and selling opportunities, further enhancing your trading strategy. In conclusion, yes, trading US 30 can be profitable, but it requires careful planning, a well-thought-out strategy, and diligent risk management. It's not a guarantee of making money, but with the right approach, it can certainly be a profitable venture. While US 30 trading can be profitable, it requires careful planning and a robust strategy. Let's wrap up what we've learned about the best strategy for trading US 30. We began by introducing the US 30, an index that's often regarded as an indicator of the US economy, the world's largest. It's a liquid and popular index for traders, with domestic and international events often influencing its price. It's also a potentially lucrative index for those looking to diversify their holdings and increase their portfolio's US-based investments. We then moved on to understanding market trends, a crucial part of any trading strategy. In an uptrend where prices are generally increasing, you only want to buy US 30 if the current price is above the moving average line. Conversely, in a downtrend where prices are generally decreasing, you'd only look to sell if the price is below the moving average line. Choosing the right time to trade is another key component of a successful strategy. When the price is exactly on the moving average line, it's best to wait for better US 30 trading opportunities that meet the parameters we've discussed. We also delved into the use of moving average lines for trading US 30. These lines help us determine market trends and pinpoint potential buying and selling opportunities. Remember, in an uptrend, you'd only want to buy if the price is above the moving average line. In a downtrend, you'd only look to sell if the price is below this line. Monitoring key companies is also critical when trading US 30. The companies with the most significant influence on this index are Boeing, 3M, Chevron, Apple, Goldman Sachs, Visa, and Home Depot. Keeping an eye on these companies can provide valuable insights into potential market movements. Finally, we explored the potential profitability of US 30. Given the high value of a single US30 contract, using CFD trades to open positions in this index can be a lucrative strategy. However, it's essential to remember that trading involves risk, and it's crucial to only trade with money you can afford to lose. So, that's it. We've covered understanding US30, recognizing market trends, choosing the right time to trade, using moving average lines, monitoring key companies, and the potential profitability of US30. Each of these aspects is a crucial piece of the puzzle when it comes to developing a successful strategy for trading US30. With careful planning and a sound strategy, you can navigate the world of US30 trading successfully.